Hey, good morning, everyone. First of all, thanks for joining in a short notice. Right, most of us don't take the time to learn the strategies, concepts, and we try to just trade just like we gamble in a casino. That is where 95% of the retail traders lose. But when you have a proper systematic approach, a rule-based approach, we can be successful 90% of the time. So this session is basically to help all the members to understand how we can make nice profits just using one ticker. You don't need to look at so many different tickers. Just you can watch one ticker, which is SPX, how we can make some nice gains every day. There are different strategies we can follow. I'll explain all of them. But if someone is joining my webinars for the first time, my name is Kishore. I'm from Houston, Texas. I worked in IT for more than 20 plus years, and now yeah, I'm mainly focusing on trading, full-time trading, and I trade stocks, options, futures, cryptos, currencies, and I trade on prop firms. I trade on individual accounts. So if we do in a right way, then trading can, right, we can make much more than what a doctor, a surgeon, right, a neurologist, a cardiologist can earn. If we have a proper strategy, if we have a proper edge. Otherwise, we may lose also in a big way. So always, right, based on right, take time to learn, practice, and once you get the confidence, then use your real money. Until that time, you take few days to understand the strategy, practice it on a paper account, then you can go ahead. So again, why you need to take time on a weekend, on a Sunday, you can spend time with your kids, family, but why you need to take time to learn, right, to spend next half an hour, 45 minutes or so? Because as I said, right, we have using SPX and earnings, we are making 90% success using our indicators. So we are making, right, up on a 2 million account, we are making 100K, 150K, 160K, like that. Just we started two funds recently. One of the fund we started around 3 weeks back. We made around 47% growth in that. There is another fund which we started 2 weeks back that we made nearly 23% on that 2.5 million. So that is how, when you have proper edge, proper strategies, proper rules, there is a huge success. And we know how the job market is, right? Job market is getting more and more tougher day by day because of AI, or because you might be over experienced already. You have 20, 30 years of experience. It gets more and more difficult as, right, once your experience goes up also, because, right, they feel like you are overpaid or you are over experienced for a job. That is also another reason why we need to have a backup plan, or have a backup source of income, because trading is something global, right? Whether you are in US, India, UK, you can trade SPX, you can trade earnings, all these things. So once you have that skill, you don't need to worry. And it's not just me who is making. There are many of our members, right? You can see, when one week I joined the RC family, I can see my PF increasing each day. Thank you again for your great sessions and patience in explaining all the questions we have. Really, you guys are changing many lives. Learn and don't do any mistakes, right? You can see it, right? Generally, most of us, when there is some complaint, we try to send a message, we try to put a review. When something is going good, most of us generally don't tend to appreciate. But you can see hundreds of messages, even with a small account, right? I was able to make around 70% with a small account within a week with the help of your indicators. Thank you so much for your support. Mine is very small account. Within a week with only SPX, I got 7K profit. Thank you very much for the indicators and the support. So there are a lot of members who are getting benefited, and I want to expand it so that everybody, because there is no competition in trading. If I make money, you can also make money. There is no competition, right? It is not like a corporate world where everybody will try to suppress others, right? Your manager don't want you to do better than him, so that he can stay as a manager, you will stay as an employee. But in trading, there is no such problems, there is no such issues. We all can make money. So again, going back, right, that is the reason why, put your focus, put your time for next 45 minutes to 1 hour. It can help you a lot in your trading journey, right? The core point is, you need to have a proper edge. You need to have a proper strategy. Don't trade with emotions. Don't trade because somebody told you SPX will go up or Tesla will go up, Nvidia will go up. You need to understand. You need to understand certain things. You need to have a proper trading strategy or trading plan. Then you will be very, very successful. Otherwise, you just trade with your FOMO. You enter a trade without understanding why you are entering, or you exit a trade without understanding why you are exiting. Then that is where 95% of the retail traders lose, because they don't understand why they are entering or exiting. So in the next few minutes, I'll explain the strategy. I'll also show you on the chart when we have to use that strategy, so that you can understand it, you can visualize it much better, you can remember the concepts in a better way. So what do you mean by this zero DTE, right? Forget about SPX for some time. Understand what is zero DTE. Zero DTE means basically you have 0 days for the expiration, right? Just think like you have a coupon which you can use for 1 year, right? The coupon cost, if I say that, okay, using this coupon, you can go to Target or you can go to Walmart, you can save 5% every time whenever you do shopping. So if I tell you that the cost is $100 and you can use it entire 2025, do you think that is a good deal? You can put your comments, right? If I say that you can use this coupon for next entire 2025 and the cost is $100. Every time you go to shopping, you can make 5% discount. You will get 5% discount. So that is a good deal, right? Because every time you may do $50, $100 shopping. So if you have 1 year time, you have you can easily get back that money, whatever you are paying. But if I say that you are right, this coupon is $100, but only you can use by end of today. So do you think that is a good deal or do you think that is too much? Right? I am telling that expiry of the coupon is only today. Only by end of today you have to use it. So will you buy? Will you go and buy it? That is too much expensive because within 1 day you may not be able to do that much shopping, right? So you don't. So in the same way, when you have more time for the expiry in the option contracts, the option premiums will be very, very expensive. But if the contract is expiring today, the option premiums will be very, very less, right? The cost will be very, very less. That means your investment will be very less. So if suddenly you buy a call, suddenly it starts going up, right? You will make huge profits. Or you buy a put, suddenly start SPX, right? SPX is nothing but 10 times of SPY, S&P 500, right? That is an index which basically tracks the performance of 500 top US stocks. So SPY is like a baby of SPX. SPX is 10 times the value of SPY. So most of you might have traded SPY or QQQ, right? That is an index, right? When you trade on a stock, suddenly Tesla gets a bad news something, or Tesla gets a good news, right? Stocks can be manipulated easily. But or Nvidia, suddenly there will be restrictions from China. Nvidia can suddenly drop overnight. But when you are trading on an index, which is a combination of 500 stocks, the chances of manipulation will be very, very low. Right? One stock can go down, two stock can go down, but if other 498 stocks are doing good, your SPX can go up. Or if the entire market, if there is a bad news, Trump is announcing some tariffs on India or Canada, Mexico, suddenly again one more time. He said like, okay, until next 1 month, there won't be any tariffs. But again, today he decides that he want to put some tariffs on UK or some Iraq, Iran on the oil imports. Then suddenly market can drop. So such type of things can happen and we can make huge, huge advantage. So SPX is nothing but an index which tracks 500 companies, just like SPY. SPX is 10 times of SPY. So a zero DTE option means basically we are trying to, there are certain tickers, right? For example, your stocks, Tesla, Nvidia, AMD, Google, Amazon, all of them will generally have a Friday expiry. That means if you buy on Monday, you have time until next 5 days. So your premiums will be little more expensive. If you buy on Friday, they are expiring on Friday, that is called as a zero DTE. That means on same day you are buying, same day you are selling, then those stocks. But generally stocks have a weekly expiry, right? If you buy on Monday, you have to wait until Friday for the expiration. So if you buy on Monday, the option premiums will be very expensive for all the stocks. But for ETFs like SPX or SPY, QQQ, you have something called as same day expiry. That means on Monday you can buy with the expiry date of Monday itself. You can buy on Tuesday, the expiry date is Tuesday itself. So your premiums can be cheaper for the same day. So that's the reason your investment is low. And if you can find the direction right, then you can make huge profits. If you can identify whether SPX will go up, and if you can buy calls, you'll make huge profits because you are, because the day on the same day you have expiry, right? Just like that coupon example. If I say instead of $100, I'm telling you, okay, right? I understand $100 is too much, but I will sell the same coupon for $1. Then you might be interested because you can go to Walmart, Target, you can make 5%, 10% discount with that coupon today itself. So instead of, in the same way, instead of buying a weekly expiry, monthly expiry, you are buying a same day expiry contract where your cost is very, very minimal. Cost is less. And if you find the direction right, you can make huge profits on them. So that's why this zero DTE strategy can make huge money because already the theta decay, all those things might have already went down. You are buying on the last day in last 1 hour, 2 hours, and you can make with a low investment, you can make huge returns using the zero DTE strategies. Right? That's why we call on Friday we buy Tesla or Nvidia or such type of things, and we call them as lottos. That means in last 1 hour you buy with a very minimal cost. Suddenly it goes up, you make 100, 200%, 300% same day. Suddenly, right, it is at a sell order block, you buy a put, suddenly it drops, you make 200, 300%, right? When you are buying on the Friday in last 1, 2 hours. That's why we call them as lottos, lotteries, where because you have only well less time. Within that less time, if it drops, you make huge. Otherwise, that will become zero. So in the same way, so for stocks, you have that opportunity only on Friday because generally they have only weekly expiries. If you want to do this zero DTE for stocks, you have to wait until Friday. But whereas for indices like SPX, SPY, QQQ, you have this opportunity every day, right? You have this, they have contracts which are created for each and every day. So that is the advantage we take SPX zero DTE strategy. So moving on to the next one, right? Why it is right? What are the main reasons why people prefer this zero DTE? Why there are nearly 70% growth on zero DTE expiry recently in last 1.5 year because of the affordability, right? Even if you have a small account, you have a 5,000 account, 3,000 account, you can use that small account and you can grow your account because your investment is very, very low. If you have to buy for next week expiry, next month expiry, your investment is huge. But you are buying the coupon or buying a option contract for the same day, your investment is very low. Right. The second thing is instant gratification. Immediately by end of the day, by next 1 hour, by next half an hour, you suddenly you see prices going up, you make 20, 30%. Right. In a bank, we have to keep for 1 year to make 0.25%. Whereas here, if you find the direction right, within half an hour, you will make 30, 40%. So that instant gratification, you immediately see the benefit. Then there is no overnight risk, right? So for example, you are buying a Nvidia option calls tomorrow. Suddenly, Trump announces some restrictions on China, right? China says that, okay, we don't want to buy any more Nvidia chips. Suddenly, right, it might be looking very bullish in the morning, but overnight it may go down $10 down. All your premium will become zero when you are buying a Friday expiry. But when you are doing the same day expiry, that means you are buying in the morning by 3 p.m. It is done. Whether you make profit or loss, it is done for the day. You don't have that overnight. Suddenly there might be another new virus from China. Suddenly there can be a war between Russia, Ukraine, or something. You have all such type of risks when you are holding position overnight. But when you are opening the trade and closing on the same day, you don't have such type of overnight risk. And then compounding returns, right? Especially if you have a small account, you saw success stories yesterday from Syed, Arif, and others. right? Can then you saw many more success stories of Venkat who grown his account from 6K to 60K in 1 month. So you can have a cash account. You trade some, right? Today you take one zero DTE SPX. You make some 1,000, 2,000. Now you have 8,000. Now again next day you take some two contracts. From 8,000 you went to 11,000. Then you take another two contracts, three contracts of calls or puts. Now you went to 14, 15. So that compounding is possible when you follow a proper strategy, proper direction with SPX 0 DTE. Then why SPX, right? All these reasons are for any 0 DTE contracts, whether you can take all the stocks on a Friday or you can do indices from Monday to Friday for the same day expiry. But why SPX is the best one out of all? Right? Because SPX is the most liquid picker across the globe. If you see the volume, there will be millions of transactions each and every day with SPX. You have NDX also, which is NASDAQ, right? Another index for 100 big stocks, but SPX is the number one. You can, right? There is so liquidity means if you buy something after a few minutes, if you want to sell, you should be able to sell it. If you buy some penny stock, right, you may buy, but you may not have any. When you want to sell it, you may not have any buyers. There won't be much liquidity for penny stocks. But SPX is an index which has the highest liquidity compared to any other ticker, right? Even when you compare with SPY, QQQ, SPX is the number one ticker in the entire stock market. So you don't have a problem when you want to sell it, when you want to book the profits, immediately there will be someone who want to buy it. So that is the number one reason why we mainly focus on SPX. Then you have lot of expirations, right? You have same day expiry, next day expiry, 2 days after expiry, like that. You have so many. You have weekly expiries, monthly expiries, daily expiries. So that is the reason, right? That is another reason why we can. So for example, if I go to SPX, right, you can see 18th Feb, 19th Feb, 20th Feb, 21st Feb, 20, right? Again, you have the weekly expiry and also monthly expiry. So this is the weekly expiry. This is the monthly. If you see in the yellow color, that is a weekly expiry. Whereas again, you have monthly expiry, which this 20th will expire on 21st. Again, you have 24th, 25th, 26th, 27th. Like that, you have always lot, right? For every day, you have expiry. For example, if you go to something like Tesla, you only see 21st Feb, 28th Feb, 7th March, 14th March, 21st March. You don't have daily expiries, right? But if you look for SPY, you see again the same daily expiries. SPY, SPX, QQQ, they have daily expiries. So, but out of all of them, SPX is the best one. Why best one? We will see. So you have lot of expirations. You can trade it every day, right? Every day. For example, tomorrow morning, if I want to trade, I will use I will use 18th Feb expiry. Right on tomorrow is holiday for the market. So if I want to trade on Tuesday, I'll use 18th Feb. If I want to trade on Wednesday, I'll use 19th Feb. Because my investment is low, my return can be 300, 400% also. That is the reason we can trade on the same day expiry. We can make nice profits. Then, so that is another reason why we SPX. Then you can trade less contracts. For example, I can also, right? You also have SPY, also have daily expiries, or QQQ also have daily expiries. But why SPX is better? Because SPY is like a child of SPX. I have to buy 10 contracts. That means I am paying nearly 65 cents, nearly $6, $7 for buying 10 contracts. Instead of spending $6.5, I can just buy one SPX contract. So I'm only paying commission for one contract here instead of paying 10 contracts commission for SPY. So you can trade less number of contracts with SPX instead of doing for SPY or QQQ, and you can save on those commissions. Then going back, another major advantage is it is cash settlement. That means you don't have a problem of stock assignment, right? If you buy Tesla or SPY or QQQ, sometimes the brokerages or right, the buyer or seller, they can assign the stocks to you. But when you do SPX, it is completely cash settlement. There is no issue of they assigning some stocks, right? For example, if you go here, if I want to, you can, if you want, you can buy this, right? By paying $6,114, or if I go to SPY, I can pay 609 and I can buy. So suddenly, if your direction goes wrong or you took a trade which goes wrong, they can assign the stock or they can assign that ETF to your account. But when you do SPX, there is no such problem of assignment, right? The broker or the buyer or seller of your contract cannot assign them. It is just cash settled. At the end of the day, that is done. The trade is done. You don't need to worry about stock getting right. Sometimes we take earnings calls. Suddenly you get assignment on that stock. But with SPX, you don't have that problem. Whether you make profit or loss, for the day you are done. You don't need to worry. Somebody may assign some stocks. You may all your account may be blocked with that stocks. You don't need to worry about that. Right? That is another major advantage with SPX. Then most one more major advantage with SPX is you have this IRS 1256 contract tax benefits. That means you only pay on right only 40 right 60% of the benefits on the gains you pay long term gains. 40% only you pay on the short term. Right? When you trade stocks, you have to pay 100% short term gains if you are not holding the position for more than 1 year. But when you trade SPX, even though you are closing the same position, opening, say, or closing on the same day, every day you are doing trading, you have 60% of capital gains, 40% of short term. That means you can save a lot on the taxes. You can save a lot on the commissions. You can save a lot on the taxes. That is another reason why there is so much liquidity for SPX. Now let's look at some strategies, right? How to make that 10% growth, 20% growth on your account, right? How you can make nice profits every day. So the first strategy is buying a call, right? For example, right? Let us take an example, right? I will show you. So this is like our indicators where you know where the big companies are buying, big companies are selling. For example, right? Let us say on Tuesday morning, once market opens, your price is here, somewhere here, right? And you see that there are 42 million contracts, right? There are big companies like JP Morgan or Chase, BlackRock, or right, Morgan Stanley. They want to buy SPX here. So if your price is somewhere close to that, then you just buy one call contract, right? One option contract. So you can go here, right? So if you are an SPX, right? I am showing you think or swim screen. You might be using whatever brokerage platform, right? Whether it is Robinhood or Thinkorswim, IBKR, whatever it is, the concept is same, right? For example, on 18th morning, when you see that your price of the SPX is very close to a big buy order block, that means there is 90% chance because they invested millions of dollars or trillions of dollars and buying that, or they have their limit orders, right? They have their limit orders kept here because they are expecting when price comes here, they want to buy it. So again, it will go up. So when Tuesday morning when market opens, you see price is close to this, then immediately what you can do, you can just go and you may buy some 6110 call, right? Currently price is 6114, or you can buy somewhere like 6115, 61120. You are spending some $1,000, right? You can see there is 12,478 volume. Lot of people are buying it. There is lot of open interest. That many contracts are open for that price. So there is very high possibility price will go to 6120, 6130 on Tuesday morning because there are a lot of big companies already kept their limit orders. So there is a high possibility for price to go up on Tuesday morning. So all you do is you go and buy a call. And if you buy a call and if price again starts going up, right? It is in a it, it comes here, you are buying a call somewhere close to a big buy order block, and then it starts going up. Your contract value will keep on going up. As it keeps going, right, from 61.10, it goes to 61.15. You make nearly 40% gain. It goes to 61.20. You made nearly 100% gain. It goes to 61.30. Or like you make 300, 200% gain. Like that, you wait for price to come to a big buy order block where big companies are buying and then buy a long call. Then you will make huge profits. So that is your strategy one. So always you wait for price to come close to a buy order block and you see whether it is reversing or not. Right? Price comes here and you see a green candle, right? There might be some red candle. Suddenly it touches this, starts going up. Because there are so many buyers here. There are so many big buy orders are here. Then price will start going up. Now, once you see that reversal, right? You also see that now sellers took the control on Friday. They started bringing the price down. After, right, maybe Tuesday morning, it will come here, oversold, and then it will start going up. When price is here, you buy a call. Or when price is here, you buy a call, naked call. And if it starts going up, your contract value will go up 30, 40, 50, 100% up in the same day. So that is how you can use the strategy one and you can make huge profits on the same day using a long call, naked call, right? It is whenever you are bullish, you buy a call, you are an option buyer. So what is your risk? Whatever premium you are paying, only that is your risk, right? If you are paying, for example, let us say you are buying a 6120 call. That means for each contract, your risk is 1140 dollars because you have to multiply with 100. So that is your risk. If it goes up, you will make a lot of money. If price goes down, the only is right. Whatever you paid is the risk. But if because all the big companies are also buying at that point, and if it touches this and starts moving up, you can make huge profits. Within few minutes, you make 30, 40, 50% growth. Your 1100 will become 1500, 1600, $2,000 within few minutes with one contract. So that is called as buying a naked call. So you have a limited risk, right? If it starts going up, you will have, but suddenly let us say it becomes shopping, right? That means price is coming here and then it is not going up. Just right. Just let us think that there is some bad news on the day. So it came here, but it is just staying here, right? It is just moving in a sideways instead of going up. Again, there is very high chance when it hits it, it will go up. But let us take a 5%, 10% chance where price stays here. Then you are when you buy a call immediately it starts moving up, you will make huge profits. But if it comes here, starts just staying here in a sideways, your theta decay, time volatility, all those things will be your enemies. So there is no right, it is not moving. It came here, just it is staying here. It is not going down, it is not going up. If it stays here, that is where we will lose. But if it comes here, starts immediately moving up, you will make 100%, 200% within few minutes. Otherwise, if it just stays here or if it goes down, we will lose the money, right? If it stays here, you will lose. If it goes down, you will lose. If it goes up, you will make nice profits. You have a limited risk, and also only one way there is a way for you to make money. That is, it touched it, then started moving up quickly, then you can have a huge reward. So you have a high risk and high reward. So your risk, high risk, because out of three, right? There three things can happen when price comes here. If there are more number of sellers than 42 million, if suddenly there is a bad news on Tuesday morning, even though there are 42 million orders, if there are 50 sellers, 50 million sellers, they can break the support, can take the price down. So that is one chance where we may lose all that $1,100 we kept. Or it is not very major bad news, but some little bad news. Then price may come here, it may just stay here. There is no bad news. Suddenly it comes here, then immediately it will start because there are so many orders waiting here. So when there is more demand, immediately price will go up. It can go all the way to nearly 6120 like that. So you will make huge profits. So out of three possibilities, price can go down, price can stay here, price can go up. Two ways you may lose money, one way you will make money. So that is how you have a higher risk but you also have a higher reward. Time is your enemy. If the volatility increases, suddenly it starts going up, you'll make huge money. You have a defined risk strategy, you have unlimited profit potential. Suddenly there is a major good news. Suddenly it breaks this resistance and keeps going up. Right? Trump says that okay, no more tariffs, nothing, everything, right? I am removing all the tariffs. So you want everything to be fine, then it may go break this resistance, it may do a breakout, it may keep going up, right? Already SPX, NQ, everything is making all-time highs. So if it breaks all these things, then goes up, you have unlimited potential, right? You paid only $1,100. It can become 2,000, 3,000, 5,000 as it keeps going up. Your risk is limited, right? If it goes down, your risk is only 1,100. But if it keeps going up, you can make 300, 400% on your contract. There is no limit, right? If it goes up more and more, right, you can make huge profits. So that is your strategy one. If you even if you have a small account, you can convert it to a cash account. And if you wait for this level, it comes to this level, you see that price is going up, you can buy a call contract, right? You just go here, right, whenever we say, okay, I am buying a call, you go here, click on this, then click on confirm and send. That's it. You bought a call. And then once it starts moving up, you will make nice profits. So that is your first strategy, doing a long call or naked calls on SPX. Then let's go to the second strategy. So any questions on buying naked calls? Right. So your stop loss, right, in that scenario, right? For example, in that scenario, for example, if price comes here, right, and then you see a green candle, then your stop loss is little bit below this, right? Because I know that there are a lot of buyers here. When price comes here, it can go up. So I can put my stop suddenly. If price is dropping, I can put my stop loss. If price drops from 61.08 to 61.05, I can close my trade because I see that, oh, even though there are a lot of buyers here, price is dropping. That means there might be some bad news, right? So here you see there are a lot of buyers sitting here. But if price is still dropping below that, right, 95% chance price will touch this and start going up. But there is always that 5% chance if there is any major bad news during that time, if it can drop. So I'll just have my stop loss little bit below. If price drops little bit below, some 2 points, 3 points, right? Maybe here. I can just go here and I can say create a right some I will put a stop loss, right? That is I can put a horizontal line and I can show my stop loss for my SPX long position. So this is that is my strong support. There are a lot of buyers here, right? I will buy SPX naked calls as I can see 42 million buyers here. So I'll whenever price comes close to this, I'll buy a naked call. If it starts going up, right? Even if you buy one contract, your contract cost is 1100. If it goes up here, it will become 1200. If it goes here, 1300, 1400, 1500, 2000, like that, it keeps on going up. If you buy one contract, if you buy 10 contracts, then 10 into 1100, 10 into 1200, 10 into 1500. So, but because of some news, if it drops, then I want to take my stop loss here, right? I don't want to wait. I see that, oh, even though there are buyers, it is dropping. That means there might be more sellers than the buy orders here. I can just take a small 10% stop loss. So either I can make 50, 100% gains, or my reward risk is 10%. If it comes here and starts moving up, my reward is 100%. Because from 61.10, you see again the big sellers are somewhere here, right? At 61.24. That is your resistance. That is where big companies want to sell. This is where big companies want to buy. So if price comes here and starts moving up, it can go nearly 10, 12 points. That means your call can become 100, 150, 200% by the time it goes here. So your buy price is here, your stop loss is here, your take profit is somewhere little bit below this. So you don't want to wait until last minute, you buy it here. So that is called as naked calls, buying calls, going long position. You right at the same time, you can also go do with SPY if you want. Right. Again, I told you what is the problem with SPY. Here you can just buy one contract. There you have to buy 10 contracts to make the same profit. You are paying more in commissions. But if you do with SPX, if you watch for levels or orders or a strong support where the big companies are buying, you have a high possibility to make huge profits. Then let's go to the next strategy, right? Which is puts, right? Instead of calls, let us say, right? When the market opened on Tuesday morning, the price is not here. Already SPY moved in the pre-market, QQQ, they all moved well in the pre-market. By the time you see on Tuesday morning, the price is somewhere here. Then that means there is a high possibility for a drop because big companies want to sell the SPX here. Now, instead of buying calls, we'll buy something called as puts. So I'll go here and then, so I see that price is somewhere around 61.25. I see there are a lot of sellers here. They want to sell and take profits, right? Because they bought it here, big companies bought it here. They want to take the profits here. So when on Tuesday morning, when market opens or at around 8:45, 9 o'clock, I see price is somewhere here. Then what I can do? I can go and I can just go and buy the puts here, right? Instead of buying the call, now I'll go and buy a put, 61.20 put. And if price drops from 61.25 to 61.20, 61.15, my contract value will keep on going up. Same thing, I'll make huge profits with my put contract. If it if it is at a buy order block, I buy a call contract, my value will go up. If my price is at a sell order block and it starts going down, I'll make huge profits with my put contract. Again, you have unlimited profit, unlimited potential, right? Because if price keeps on going down, right? If it breaks this, if it keeps going down all the way, right? There is nothing, no support until 60.72. So you can make 500, 600% on your put contract, right? Because from here, if it breaks this support, there is nothing in between. There are no other buy orders. Just one put contract can make you 400, 500% on Tuesday morning if it breaks this, right? If it breaks this value, it goes here, then suddenly there is some bad news or something. Suddenly it keeps dropping. It can come all the way till this 60.72. That is where again there are a lot of buyers, right? Big companies always want to bring the price where their orders are, right? They already kept the buy orders here. They will add some more of their money to bring the price here. Or if JP Morgan have their sell orders here, then Bank of America will put some sell orders. Wells Fargo will put some more sell orders. BlackRock will come and put some more. Morgan Stanley will put some more sell orders. They will try to take the price where again there are where like these are liquidity levels or these are like the magnets for the price. Price will try to come here. So if it breaks this, so my first right, if I take a put here, this is my first target, right? I will put my stop loss little bit above. So if I'm buying a put here, my stop loss is little bit above this. That means I am thinking that there are a lot of big companies who want to sell, so price will drop. But in case of some sudden good news, price starts going up. I will just take a stop loss here. But if price starts dropping, I'll try to take profits here. If it continues, right, it also breaks the support because of some bad news or because of any reason. If it also breaks this, then I know that there is nothing in between. Then the price can go all the way till the 60.72. Right? There is a high possibility we may see a big drop on Tuesday morning. Then we can make huge profits by buying a put contract. So our risk is whatever you are paying, that is the only risk. But if it goes down further and further, you can make unlimited potential. That is the advantage when you buy the long puts. That means you are buying a put, you are bearish for SPX, you are buying a put, and you have a limited risk. Whatever premium you paid, that is the only, but you have unlimited profit potential. You have a but again, if it only stays there, right? The price touched it, just drop little bit and only staying here. Just it is staying in a consolidation or in a choppy mode in a sideways market. It is not dropping suddenly. Right? Again, 90%, if it touches this, immediately there will be a big red candle, a huge red candle. But for some reason, because buyers are more or something, if it stays choppy, you will lose money. Or it breaks this and goes up, you will lose money. But if it drops big or even drops until here, you will make 100, 150%. If it drops below this, comes all the way here, you will make 400, 500%. So you have only one way to make money. That is only when it drops. If it stays choppy, you will lose. If it goes up, you will lose. That means out of three chances, you will make money only if it drops, but you will lose if it stays at the same price, or if it goes up more, you will lose. So that is, you have a one out of three chances to make money, but you have unlimited potential. You have low risk of losing only your whatever premium you paid, that is the risk. Then let's go to the next strategy, right? Which is when you are bearish. One thing is you can buy a put, you can also sell a call, right? So if I am bearish, right? Let us say again the price is somewhere here, right? You can either buy a put contract. That means you are buying a put contract just like you buy an insurance contract, right? You are entering an agreement with the insurance company, right? Even if my car gets into accident, value goes down by 50%, you have to pay me. If it becomes a zero, right? 100% I lose the value, you have to give me that entire value of the cost. In the same way, when you are buying a put, you are paying a premium to the seller and you are telling him that, okay, I am buying here. If it goes down, you have to give me the full value. If it goes for whatever value, I am buying at 61.25. If it goes to 61.10, you have to pay me. If it goes to 6100, you have to pay me, like that. He has obligation to fill your contract. He need to pay. So if it goes 10 points down, that means nearly you will make 100%, 150%. If it goes 20 points down, you will make 250%. If it goes 40 points down, you will make 500%, like that. So, but only if it goes down, you will make money. So instead of when you are bearish, one more thing you can do is you can also you can buy a put or you can sell a call. If you are a seller, if you are selling a call and collecting premium, that means what I am doing, instead of going and clicking this buy button here, right? Instead of buying this by paying $1,900, what I'll do, because I am bearish, I can go because I feel like the price will drop because big companies are doing. I can go here and I can click on the sell button here, right? Here, if you click buy, here you click sell, right? When you are bullish, you can buy a call or you can sell a put. If you are bearish, you can buy a put or you can sell a call. If you sell a call, you need to have a big account, right? You need to have a big margin. But even if price stays choppy there, you will make nice profits, right? It is not dropping, but if it is just staying choppy, you will make profit. Or it goes little bit up, you will make profit. It goes down, you will make profit. So nearly 60, 70%, right? When you buy a call, only if it goes up, you will make money. When you buy a put, only if it goes down, you will make money. If it stays choppy, you will lose. If it goes up, you will lose. But when you are selling a call, when you are bearish, you can make money in nearly three, four different ways, right? If it stays choppy, you will make money. If it goes only a little bit up, right? It should not be too much up. If it goes just a little bit up, you will make money. Or if it goes down, you will make full 100% of the premiums you collected. So that is the advantage because you are a seller, right? So when all these insurance companies, car insurance or health insurance companies, You are paying only $100, but they are saying that they will cover your $50,000 worth of car. How do you think they can do it? Because they know that out of 100 people, if 100 people are paying them premium, only one or two people may have accidents. Other 98 people, they are getting the free money. In the same way, sellers will make more profits in the market most of the time. So, as a seller, even if price stays here, you will make profits. Price goes down, you will make profits. Price goes little bit up, you will make profit. So instead of buying a put, if I sell a call, I have more chances to make money. In the same way, when price is here, I can buy a call or I can sell a put. Right? I can go here. I can, instead of buying, I can sell a put if I am. So that is the next strategy where you can enter a short put. So if you are bullish, right? Again, don't get confused. It is just very simple. If you are bullish, you can buy a call, but only if it goes up, you will make money. But if you are bullish, you can also sell a put, right? Only you have two things, call or put. Call means you are bullish, you think price will go up. Put means you think price will go down. So when you are bullish about something, you can buy a call and make money, or you can also sell a put and make money. If you sell a put and price stays here, you will make money. Price goes up, you will make money. Price goes little bit down, you will make money. If price goes for more down, then that is a risk. You have unlimited risk. So that is another strategy where you have higher 70%, 80%, you will make money. But if it goes suddenly so much down, that is where you have bigger risk. So that is the next strategy. Then let's look at one more strategy. Right? There are so many ways I'm explaining. So you understand, right? If you are a small account holder, right? The first two are the best ones, right? You can do when I do a bull put or bear call or I do something, then there are a lot of traders who are just buying a call, naked call. They are going up 2,000, $3,000 with one contract. If I do a bear call spread, right? Because I take 100 contracts, 200 contracts, and generally when you are doing a bear call bull put, you have 90% chance of making money. When you do a long put, you have higher risk, but you will make huge profits. So if you have a small account, you have a cash account with Robinhood, you have a cash account with Thinkorswim. Whenever I do a bull put, you can always do a long call. Whenever I do a bear call, you can always do a long put. Right? So the next one is called as debit spreads, right? Bull calls. What do you mean by bull calls? Basically, right? For example, here, what you can do, instead of just buying a call, you are buying a call and also you are selling a call. So now your investment is your, for example, if I go to this example, right, I am bullish about something. I am bullish, right, on a Tuesday morning, your price is somewhere here. So I am not just buying this one. I am also, so if I have to just to buy this one, my investment is nearly $1150 if I want to buy this 6120. So what I am doing is I see that there is a big sell order block here. So that means price will, it may come here and then it may go and then it will go here and then drop. So what I can do, I can buy a call. I can also sell a call. So I can go here. I can do something like buy vertical. So I am buying a, let us say some 6120 or 6110 call. And I am selling a 6125 call. So now my investment got reduced. Instead of paying 11.1150 dollars, my investment is only $800 now. So do you see? So here I think price will go up. But I also see price will not go above this because there are a lot of sellers here. There are a lot of buyers here. If price is here somewhere on Monday morning, I buy a call. I also sell a call at the same time. So that price, instead of investing $1150, my investment is only $800. And if it starts going up, now your ROI is more, right? If you invested 1100 and it starts moving up, that means your profit is only on the $1100. But if you are investing only $800, When it goes here, you take profit on one side. Again, it starts dropping, you take profit on the other side. Both sides you can make money with a low investment. You have a big buy order here, you have a big sell order block. You are buying a call, you are also selling a call. You are selling this 61.25. You are buying 61.10 or 61.15. You make profit on this side, you make profit on this side with a low investment. In the same way, if it is a right, you are doing a debit spread. You buy a put here, you sell a put somewhere here. So you see that it may go down from here, but instead of investing all $1,900, you are also selling a put collecting money because you see that price will not go here. So you buy this, you sell this. Now your investment instead of $1,900, your investment is only $1,000. So if it starts going dropping, or you buy this and you sell this 61.10 put. You buy this 61.25 put. So you will make profit on both the sides. So that is called as a debit spread on the put side. So this is bull calls, call debit spread. Then you have bear puts, put debit spread. So that is another strategy where you are using low investment and you can make nice profits. So I hope you are getting it, right? Again, if you see the same example, right? You have prices somewhere here. Now, if you want to just to buy 61.10 call, if you buy 61.10 call, it is nearly $1,700. You may have a small account. You don't have 71. So you don't want to just put all $1,700. You also see that there is a big sell order here. So price will touch here, go all the way and then drop. So now you are buying this 61.10 call. You are selling a 61.25 call. So I will go 61.10. I will go here buy vertical 61.10 I want to buy, and 61.25 I want to sell. So now my investment, instead of $1,700, my investment became 50%, $800. I am buying and also I am selling. So your investment got reduced and you can make, as stock starts going up, you will make nice profit. Again, when it goes here, you take profit on the calls you bought. Again, it starts dropping. You take the profits on the calls you sold. The same way, if price is here, you buy this put, you sell this put. You buy this put amount, you sell this. So again, you do the same thing, right? You go this side. For example, you are at 61.25. Buy, right click, buy, vertical. And then you are doing 61.25. And then you are selling 61.10. So instead of $1,800 investment, now your investment is only $685. So your ROI will be much more higher. So that's what we do with something called as debit spreads. Then the another one which is very, very useful, or which is very low risk strategy, that is called as a bull put spread. What do you mean by bull put spread? So for example, price comes here. Then I am selling a put here, right? Because I think price will stay above this. Whenever you are close to a buy order block, if I go here and right, because we know that as a buyer, you have only one chance out of three chances. As a seller, you have two out of three chances to make money. When price comes here, I'll do a bull put spread. That means I will sell 6,100. I'll buy 60, 90. And if its stocks goes up, as long as price is above this, you can keep all 100% of that money. Or price is somewhere here. Then I can go and I can do a bear call spread here. I sell 61.20, 61.25. I buy 61.30. Right? Then you can keep all that money. If price comes here, stays chopping, you'll make money. Price goes little bit up, you'll make money. Price goes down, you'll make money. Price goes somewhere to that 61.25 or 61.30. You only if it goes up, you have a limited risk because you have a spread, you have a hedge. You are selling 61.25, you are also buying 61.30. So you have a limited risk, very limited, very 5-10% chance of risk, but 90% you will make profits on most of the time. So that is called as a when the price is close to a buy order block, you do a bull put spread. When price is close to a big sell order block, you do a bear call spread. So if you use that strategy, 90-95% of the time, we will make huge profits with SPX every day. So for example, on Friday morning, right, we saw that we are at a premium zone. We are at a big sell order block. Immediately, we went ahead and we got the bear call spreads, right? You can also buy a put. But as I said, if you buy a put and if it price stays choppy, you'll lose. If price stays, if price goes up, you will lose. But if you do a bear call spread, right? We went and we did, right? For example, you see, let me show you options channel, SPX. So, right? Yeah, we did 6140 by 6155 bear call and collected $110 for Friday. We did SP 6150, 6160 bear call, collected $70. So, right? So you are somewhere here at 6130. I went above because I know price will drop. So we went above and we did 100, 200 contracts, or right, if you have a small account, to do two contracts, three contracts, 10 contracts, you have 95, 99% chance of making money. All the premium is yours because price is already at a premium zone and already there are big companies who want to sell it off. So I am selling a contract to somebody telling that okay, even if SPX goes up, I'll sell you at 6130 or 6140. Right? I am going much higher. I am telling him that okay, even if SPX goes to 6150, 6160, I will sell you at 6140. So, and then I am collecting the money. I am also keeping a hedge. So your risk is very, very minimal, right? Because you know you are at a premium zone, it is already overbought, already you are at a top. So now you are going up and you are doing a bear call spread. Your risk is again, right? If you want to just to do a naked put, you can do. But if you do a naked put, if it stays choppy, right? It went so much down, which is good. But if it stayed choppy or suddenly it went up, we may lose premiums. But if I go and do a bear call above 6140, because it is already overbought, the chance for it to go up is very, very, very minimal, right? 99% it won't go up. So now all that money you collected. So if you go and see, right? Okay, you can see that around morning 9:18, we got 6145, 6155 bear call. SPX 6150, 6160 bear call. That means I am selling 6150. I am also buying 6160 as a hedge, as a protection. I am selling 6145 call. I am buying a 6155 as a hedge. we are collecting $110, right? Price was somewhere around 61.30, and I see it is already overbought. There are a lot of sellers there, and we are going up and doing a bear call spread. That means if price stays below that 61.45, all that money is yours, 100% yours. So now within few minutes, you can see I took nearly 615 contracts, right? 20,000. Within few minutes, it became 36,000. Few minutes, 42,000. So take 80% with SPX bear calls. So that is the advantage, right? You have 90% of the time you will make money. When you do, when you are bearish, close to a price, one way is you can buy the puts. Second way is you can sell the calls, or you just go a little bit up and you do a bear call. 95% of the time you will make money. Or if you are close to a buy order block, there is a huge buy order block here. On Tuesday morning, you are close to you can buy the calls. If it goes up, you will make 200, 300%. But if it stays choppy, you will lose. If it drops, you will lose. But if I go somewhere here and do a bull put spread, that means I am telling that person, just like an insurance company, I'm telling him that if price drops, if it drops so much also, I'll buy it at 6100, because I know that there are big companies are buying here. I know if price comes here, it will go up. I'm going here and telling that, okay, if even if it drops so much also, I'll buy at this price. So if price stays above this price, all the money you are collecting, right? Just like insurance keeps all the premium, whatever you are paying, in the same way, I can keep all that money. So that is how 95%, 99%, again, unless there is a sudden major bad news, 95% of the time we will make profits every day. So that's what you can buy the call here, you can sell the put here, or you can do a bull put. If you do a bull put, if it drops also, you'll make money. If it goes up, you'll make money. If it stays choppy, you'll make money. So there are so many ways you can make money. Unless suddenly there is a black swan event, some major bad news or something. So that's where we are making 95% profits with SPX trades by doing bull puts. But if you have a small account, you cannot do spreads on a cash account. You can always go and write whenever I do a bull put, you can do a call, right? If it again, there is a 90% chance for it to go up. There is a 10% because I'm taking 200, 500 contracts. I want to go with a low risk approach because the price, if it comes here, 90% it will go up, or sometimes it will go a little bit down and then go up. So because I am taking a big quantity I want to take a low risk approach. If I buy calls and if it stays choppy, I lose huge premium. So that is how every day you can make huge money. If you have a 25K account, you can do spreads. You can do bull put spreads, pair call spreads. Whenever it is close to a big buy order block, you do a bull put spread. Whenever you are close to a big sell order block, you do a bear call spread. 95% of the time you will make money, right? All we need to wait for, right? So you see sellers are in control, right? Your price is close to the premium zone. There is a big sell order block. You do a bear call spread. You are all right. Again, if you have a small account, you buy the puts or you sell the calls. Again, you cannot sell the calls with a small account, but you can buy the puts. If you are right, for example, it came all the way to the bottom, then started moving up. Then you can buy the calls, you can do the bull put spread. You are somewhere here, price is here at the top. You can buy the puts, or if I have a big account, I can sell the calls. I have, right? If you buy the puts, you have 70% chance of making money. If I sell the calls, 80% chance of making money. If I do a bear call spread, I have 95% chance of making money. It is up to you, right? Which one you think, do you want to make more money but with a less probability, or you want 95% chances of success, even though you make, instead of making 100%, you may make 50%, but 9 out of 10 times you will make money. Whereas if you buy the put, 7 out of 10 you may make 70%, 60% gains. So like that, if you use a strategy where 9 or 9.5 out of 10 times you will make money. Your you can grow your account. You can grow your 30K, 40K account to 100K within 2 months, 3 months, like that. So you don't need to worry about job loss, layoffs, Trump doing something on the immigration, all those things. Because now you have a skill. Now you have a knowledge where you can sit at your home without worrying about anything. You can make nice profits. If you have a big account, whatever you make in 1 month, within 1 day, you can make with SPX. So that is where, right, I'm showing you all those examples because when you do with a proper strategy, with proper knowledge, it is not a gamble, right? It is like a science, it is like an art. But if you don't know what you are doing, if you are buying a put here, then you are taking a risk. You are buying a call here, you are taking a risk. If you understand where you are buying calls, puts, or where you are doing bull puts, bear calls, then you have much higher chance of success. That is where you can make with the bear puts or bear calls, right? With the bull puts or bear calls, you can make 95% of the time you can make money. Right? Again, there are more strategies like we can do straddles, we can do strangles, but I don't want to confuse because maybe once you understand these strategies, once you use these strategies, maybe in one of the future session, right? These are much more low risk strategies like iron condor, iron butterfly, where you can make 98% of the time you can make money. But there are many new users. If I try to give iron butterfly, all those things, you may get confused, right? It is like combination of you do puts, you do calls, multiple things. But for now, even if you just do bull puts, bear calls, you can make huge profits. 95% of the time you can make profits. So again, right, there are many members who are changing their lives. So if you go to YouTube and you can see there are many. So you see all the success stories from 30K account to 60K, from 6K account to 50K. So you can go to the playlist success stories. There are nearly, right, every week I'm bringing some three, four members and right, sharing theirs. There are hundreds of members who are changing their lives by using a systematic trading, by using a disciplined approach. So you can watch all of them. So you can get inspired, or you can see like how everybody like you don't need to know a lot of things. All you do is, yeah, wait for those levels. Don't trade somewhere in between. Wait for a buy order block or wait for a sell order block. If you are at a premium at sell order, that is the best time to do, you buy the puts or sell the calls or do a bear call spread. If you are somewhere here at a big buy order block, that is the best time you do the bull put spreads or buy the calls or sell the puts. So just if you follow this simple strategy, every day you can make $400-500, even if you have a 25K, 30K, or even if you have a 5K account, you can make $400-500. Right? If you have a small account, whenever it comes here, you buy the calls. Whenever it comes here, you buy the puts. If you have a small account, if you have about 25K and you want to take a low risk approach, so that instead of 70% success, now you have 95% success rate. Whenever price comes here, you do a bull put spread. Whenever price goes here, you do a bear call spread. That's it. All we are doing is what big market makers are doing, waiting for them. If you see big market makers here and price is coming here, started going up, you go a little bit down, do a bull put. You have big market makers are selling, price is somewhere here, you go a little bit up, do a bear call. 95% of the time you will make huge profits. So if you trade somewhere here, right, at the same time, when price is here, you start dropping. At the same time, now you can go to ES and you can short ES. You can do options on ES. You can make money. You can short ES. You can make money. Right? For example, now it is at a buy order block. It may go up. If it breaks this, then ES. So ES came all the way here, started going up. So for example, if it comes here, then I can go long on ES. I can do a bull put spread on ES. right? I can go long, and you can make money on the prop firms without needing your own money. Prop firms allow you to trade on futures. You don't need to have a 5K, 10K, 20K. You use the same strategy and you go long on ES. You make profits, or it goes all the way to 61.42. There are big lot of sellers here waiting, right? There are a lot of sellers at the premium zone. There are a lot of sell orders here. When price goes there, you take a shot. You will easily make $400-500. You copy into 10 accounts, 20 accounts, right? You can have right, you can have bull knocks, you can have FX trader weight, you can have my funded futures, you can have take profit trader, tradeify, trade funder. So at the same time, all you are doing is just watching one chart, waiting for one price. You make money with options, you make money with futures, you make money with options on futures. You can also, if it goes here, starts dropping, then your SQQ will go up. You can make money with stocks. You can buy SQQ, you can make money with that. Like that, just all you need is that knowledge, education, learning, and then there are unlimited ways you can make money if you have a proper strategy, proper trade plan. If you don't know what you are doing, yeah, definitely there is a lot of risk in trading. You can lose a lot of money. But if you know what you are doing, if you have good tools, good strategy, then 90% of the time you can make huge profits, and you don't need to worry about job losses, inflation, cost of kids college education is going up, healthcare cost is going up, so many things are going up. Our salaries are going down, expenses are going up. Your travel expense, right? If you want to travel to India, earlier we used to pay $1,000-1,200. Now if you want to go in holiday season, it is more than 2,500, $3,000 for one ticket. So whatever you saved for 1 year, one India trip, everything is gone. All your savings are gone. So you need to have a mechanism where you should be able to save for your kids' college education, for their marriages, for right. You may have to maintain two different houses, one for your kids, one for yourself. You need to plan for 20, 30 years of your retirement. Most of us, because of lack of financial education, we don't think about all those things. We are so busy with whatever, right? Today you are making enough, you feel like, oh, I'm good. But you are not thinking like, okay, if I lose a job, can I sustain for more than 6 months? Can I sustain for more than 1 year? In retirement, you have nearly 20, 30 years of a period where you don't have a job. You have to survive, your spouse has to survive. You cannot depend on your kids. So there should be a skill which should help you to make that money consistently, whether you are in a job, out of job. So that's why learning will make you successful. And if you follow a proper strategy, trade with a rule-based approach, you will be very, very successful. If you trade with emotions, with FOMO, without understanding why, right? For example, you take an alert, suddenly there is a red candle. You immediately get panic, you close it. Even you don't wait, right? Because you don't know why you took a trade, suddenly it dropped, right? Because price will never go up. It will go up, come down, again go up, come down, again go up, come down. Like this, so it will not be one direction. We expect that, oh, because I buy a call, it should go up, right? The price will never go up or never go down in one way. Unless there is a major bad news, it will always create higher highs, higher lows, right? Go up and again come down, again go up, again come down, or it will go down, go up little bit, again go down, go up little bit. So, but because when we don't have that education, we feel, right, we feel panic. You see some sudden loss, right? 5% loss, immediately you get panic and you close. Or you already made 100, 200% here, but you feel like, oh, I can make 300%. Let me hold my trade. Right? You don't know there are big sellers waiting here to dump the instrument. It can be Tesla, it can be Nvidia, whatever it is. They are waiting, right? Because you already made 200%, but that greed feeling, right? You are thinking that, oh, if I wait some more time, I will make 250%. And suddenly there is a big sell order block. Suddenly it drops. You lost all your profits, whatever you made. So that's what, without knowledge, without proper use of tools, you don't know why you are entering, where you are exiting, or you take small profits. It can go all the way here, but you just took a 5% profit, you exited. Then it went 100, 200%. Or you got 200%, you are not exiting, right? One is the panic feeling, second is the greed feeling. right? Even though you got profit, you are not exiting. Suddenly there is a big sell order block. They are dumping it. All your profits are gone. So that's why having the knowledge, having right set of tools will keep you successful, will make you successful, will make you right that second income, or it can become primary income. There are a lot of traders who were earlier making a five-figure income in their job. Now they are learning with prop firms, right? Especially with prop firms, the 1 year short you can copy into 10 accounts, 20 accounts, 100 accounts. Even though you make 200, $300, you are copying it into so many different prop firms, you can make 5,000, $10,000 each day. So that is the power and potential of the prop firm trading. And this right, SPX trading. And also, right, I told you these tools are not just for SPX or just for prop firms. Even you can use for earnings, right? For example, Baidu earnings on Tuesday morning. You see that there is a big lot of buyers are buying at $88. Then there are a lot of buyers here. There are no sellers until nearly $118. There are no sellers. So if we do buy the stocks on Tuesday morning, there is 90% chance Baidu will go all the way to $118. Right? Again, I forgot about holiday. Otherwise, we'd have bought some Baidu calls on Friday. Then Friday morning, right, on Tuesday morning, they will make 150% profit. Or if I do a bear call spread somewhere here, I can keep all the money. Or if I do a bull put spread below this price, I can keep all the money. Because there are a lot of buyers here. Price will not drop below this, right? It will go up. Even if it comes down, it will touch this and again go up. So if I do a bull put, I'll make money. If I go and do a bear call somewhere here, I'll make money. Or if I buy a call and if stock goes up, I can do a debit call, debit spread, right? I buy a 100 call, I sell a 120 call, and then I'll make money. So like that, we can, with the right set of tools. So again, right, we have another tool which will show based on last 35 years of history, right? I can click on Baidu. So it will tell you what happened to Baidu during this February time, how Baidu reacted. Mm, if you see Baidu during this time, right, and based on last 30, 35 years of historical data, it always went up. So there is a hype, right? Your price pulse is telling that price can go up. Your profit zone is telling price can go up. So there is very, very high possibility. If we buy Baidu stocks tomorrow or Tuesday morning in the pre-market before the earnings, we can make 5%, 10% easily on the same day. So like that, yeah, if you basically use right set of tools, right set of strategies, there is a huge money we can make in trading with proper knowledge, with proper patience, practice, and process. Right? If you do without any of them, we can lose a lot of money. If you have a proper strategy, proper plan, right? Again, simple strategy, right? There is nothing anything rocket science or right? Just you are waiting for price to come to a buy sell order block. If there is a sell order block, you buy the puts or you do a bear call spread. If you are close to a buy order block, you do bull put spread or you do calls, naked calls, or you do a debit spread. You will make profits. That's it. So all right, we become right that FOMO. You don't wait until this price. You want to buy somewhere here. It can go up or it can go down. When it is in between the buy order and sell order, you never know whether it can. Right? Sometimes it may come down and go up, or it may go up and come down. So all we need to do is wait with patience for price to either come and touch this or wait for price to go and touch this. Then 95% you will make profits. But if you buy somewhere in the middle, you can make profit or you can make a loss. You are doing like it is like a coin toss 50-50. But if you wait here, you have 90% chance, right? Your stop loss is little bit here. Your risk reward is you may make 500 to $1,000 on ES, 500 to $1,000 on SPX call, 500 to $1,000 on SPX bull put. Your loss is only $100, right? When you are doing a bull put or buying a call, buying a debit spread here, your stop loss is little bit. Go 2 points, 3 points down, you do it. Or you are waiting for price to come here, your stop loss is here. If you do a bear call, you do a debit put the debit spread, you do a bear call spread, you have 90% chance of success. If it goes little bit up, right, again it will make $1,000, $2,000. Your loss is maximum $200, but your reward is $2,000. So all we have to do is wait for those levels, right? Don't don't try to buy somewhere in between. Wait for a buy order block, wait for a sell order block. Your chance of success is high. Your risk is minimal, your reward is high. But if you are buying here, there is a huge risk. It can go this side or it can go this side. There is a lot of risk you are taking. So that's what, if you do with a proper strategy, proper knowledge, proper education, there is unlimited potential we can make. Otherwise, if you do with emotions, FOMO, it is unlimited risk we have. So that's what I want to share with everyone. So again, these are custom indicators. Yeah, these are our custom indicator. We build this software which will look at all the order books and everything. They print right where the big companies are buying, big companies are selling. They show like whether it is overbought, oversold. Now this is a trading view tool. So yesterday I did a video where I explained like if you want to make 2025 best year of the life, what are the 5 different steps you need to do. So either if you have money, you can trade in your personal accounts. Otherwise, you can trade in your prop firms. You can make money. So all you need to do is take time to learn, understand. Then there is a lot of money to be made. Uh, yeah, if anybody want to, right, either subscribe to these indicators or anything, you can go to this link tree website, right? For example, if you want to, there are a lot of prop firms, right? That means where you don't need to use your own money. If SPX is at a bear, right, at a big sell order block, you can short ES. You can make money with the take profit trader. You make money with Tradify. You make money with Bullnox. You can make money with all these different companies when you open the accounts, right? If you want to subscribe to the indicators, if you want 3 indicators, you can click here. If you want 5 indicators, you can click here, right? Or you want just a stocks, US options channel or stocks channel, crypto futures channel, forex channel, India options, India stocks, trainings. You can go there and you can click all those things. So I'll also add for earnings. Earnings also I'll add a button. So earnings means only you will get for earnings. Whereas options means you will get all the earnings and also SPX, SPY, QQQ, all these things. So if SPX is going down, at the same time you can do SPY, QQQ. 95% of the time, your SPY and QQQ will move in same direction. So just like SPX, you also have NDX, which is NASDAQ, right? SPX is for ES, NDX is for NQ. So you can also do trading, right? We can do, but again, right? Start one by one because SPX is the most liquid, number one ticker. If you can make $100 with SPX, you can make $200 with NDX. That moves much more faster, much more quickly. If you get the right direction, you can make a lot more profits with NDX, Nasdaq index. This is SPY index or S&P index. But yeah, if you first you practice with SPX, then we can at the same time we can also go and take NDX. NDX also same, right? The concept is same. If your price is at a buy order block, you do bull put spreads or you buy calls or you do debit spreads, debit call spreads. If you are at a big sell order block, you do bear call spreads, you do debit put spreads, or you buy the puts. That's it. Because of zero DTE, your investment is low. You have lot of tax benefits. All you need to do is get the direction right. If you get the direction right, there is unlimited income you can make. And at the same time, you go and you take a trade on NQ. If you see NDX is at a bearish, big sell order block, then you sell in one account, you do it will go and copy it, right? With the help of replicanto, it will copy into all prop firms. So you are only putting effort one time. You are only watching one chart, right? But you are making money with Apex, you are making money with Bullnox, you are making money with Tradify, you are making money with the Take Profit Trader. That is the advantage, right? At the same time, you make money with options. At the same time, you make money with futures. So yeah, right. Again, all you need is that understanding, wait for the right setups. You cannot integrate. Yeah, it is a dynamic liquidity levels. Uh, yeah, custom indicator is it will pull the orders dynamic. So can I integrate think or swim? You cannot integrate think or swim, but you can integrate IBKR. Traderweight is similar to IBKR or think or swim. It is another brokerage company. Generally, the prop firm companies use Traderweight as their brokerage. Uh, if you when you get indicators, right, you can join live sessions. You can, right, I'll give you some option alerts, futures alerts. Well, after some time you can become completely independent, right? You when you learn, you are 100% independent. You may get up at 4 a.m., you can take the trades. You may, right, at 10 p.m. you can take the trades. You don't need to depend on somebody to tell you when to buy, when to sell. So if you have right 25 30K account, you start with two contracts. After few days you can go to 3 4, but yeah, start with two contracts for SPX. If you have a 25K, later you can move to bigger position size. So which level of trading view subscription? I suggest you can go with early, right, essential plan. So yeah, I'll paste that link one more time. So this is the link where you can go and you can click on uh, PDH means previous day high. In the sell block or buy block, right? You better you don't wait until the last minute. You can even, right, if for example you have a buy block here, or let us take SPX example, right? You have some 42.15 million. So you close your short position somewhere here and then wait for price to reverse. Your candle will come, touch, and then become green. Then you enter the calls, or you enter a bull put spread, or you enter a debit call spread. You will make nice profits. So if you enter calls, you have 70% chance. If you do a debit spread, you have 80%. If you do a bull put spread, you have 90%. In the same way, you are somewhere here, right? Price touched and the candle color became from green to red. It went up, 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 up. Then suddenly it touched it, started dropping. Then you can do puts. You will make huge profits, and you have 70% chance of making money. You do debit put spread, 80% chance to make money. You do a bear call, right? You go up and do a bear call spread, sell this call, buy this call. Then you have 90-95% chance of making money. So based on your risk level, based on your account size, it is up to you, right? If I want to, if I am a high risk trader, then I can buy the puts. Then I can make 100, 200, 300%. If I am a low risk trader, I am trading with in a fund with others' money. So I want to take low risk. I'll do a bear call spread so that I have 95% chance I'll make money. Right? If it is my own money, I can buy the puts and I can take a risk. So it is up to you where how you want to take the trade. If you are a high risk profile trader, you are okay to lose $1,000, but you have a chance to make $3,000. If I do a bear call spread, I can make $500-600, but 95% I'll make that $500-600. Here I can make 2,000 3,000 by only 70% chance I can make that. So like that, it is up to you. Once you learn, now you know what you want to take based on your risk profile, your account size, right? Otherwise, you are depending on someone to tell you, right? I don't know if I have 500, 600 subscribers, one subscriber may have high risk profile, one subscriber may have low risk profile. So we try to go with a low risk approach, right? When you go with low risk approach, your chances of success are high for everyone. When I go with a high risk approach, and if you have a right, you are a low risk profile person. If I give a high risk trade, you may take a right, you may lose, you may feel like, oh, it is not working. But if I go with a low risk approach, everybody will make money. So we generally do bull puts, bear calls. But if you are a high risk profile and you are okay to one day you are okay to lose, so because you have 200 300% chance of making bigger profits here. When you buy a put, suddenly it drops 20 points, you will make 300% on the put. So like that, once you learn it based on your account size and all those things, you can take the trades. Otherwise, you are depending on the alerts. You are just depending on someone's, right? My risk profile. I might be a high risk profile trader, or I might be a low risk profile trader. My profile may not match with your profile, right? I am okay to lose one trade, right? Because I make money on nine out of 10 trades. Even if it becomes zero, also I'm okay. But you may only take that one trade, leave all the 9 trades, right? Because you are busy in the office or something. So that's why it is important for you to learn. So you trade because whenever you are free, based on your analysis, based on your risk profile, based on your account size, all those things, right? That's it, everyone. So again, a lot of our members are changing their lives who are taking time to learn, practice, and growing their big accounts. So it is up to you. If somebody want to learn, become independent, create a second income, yeah, be part of it. You can be one of the superstars sharing your success story soon. Otherwise, you can continue to do the same thing, right? If we continue to do the same thing, we cannot expect a different result, right? No, will keep doing, right? One day you may make money, second day you'll lose money when you trade with emotions, FOMO, or by following some alert. But when you take time to learn, when you do it based on your risk profile, you will be much more successful. So yeah, it is up to you what you want to do. But yeah, if you learn, SPX is like a gold mine. You don't need to look at 100 different tickers, right? There are thousands of stocks. You don't need to worry about all those things. Just even if you just look at SPX, that is good enough. Every day it will give you a few thousands of dollars. So that's where, right? I'm just trading SPX and few earning tickers. We went up nearly 20% within 2 weeks on the. So yeah, that is the power of SPX. Most liquid, tax benefits, and always right, you have lower commissions. There are a lot of advantages if you use a proper strategy and take the trades. There's a lot of money to be made. So again, if anyone has any questions, please send me an email. We'll respond back, right? I know because it's already 1.5 hours. So we have a setup session at 4 p.m. today. So, right, when you do spreads, already you have a hedging. Or if you do calls or puts, I already told you what you need to do. If you are buying a call, you have your stop loss here. If you are buying a put here, you have stop loss little bit above. If you are doing a bull put or bear call, you already have a right. If I am doing a bull put, I am not just selling it, right? I am selling a put and I am also buying a put. That is my hedge. That means suddenly if there is a drop, I am also buying another put. I am selling this put, I am buying this put. So you have a hedge, already inbuilt hedge there. So if you are buying calls or buying puts, go a little bit some 4 points, 5 points down, 4 points down, and put your stop loss. If you are buying a put here, go here, put your stop loss. If you are buying a call here, only thing is don't trade in between. If you trade in between, your stop loss is so far. Your risk reward is not good. But if you buy calls here, you can make for a $200 loss, there is $1,000 profit probability. If you buy a put here for a $200 loss, you can make $1,000 profit. So you are risking 200, you can make 1,000 with a 80% chance. So that is where if you take the trades at right levels, maybe one day you may lose 200, but next to 4 days you will win 1,000. When you know your levels, when you know where big companies are buying, big companies are selling, you will be profitable like them 90-95% of the time. Otherwise, as retail traders, when price goes all the way up, then you get excited. Oh, Tesla is going up. Let me buy. We buy it for $8,500. Immediately, big companies will dump it to 350. When Nvidia goes to 140, 150, we'll buy it. They will dump it to 110, 120. Right? We buy here, and then it comes down. We sell here. Then immediately big companies will buy. Right? When they sell, we buy, and when they buy, we sell. We do exactly opposite. That's why 95% of the time we retail traders will be on the losing side. The big companies are on the buying side because we wait, last minute we buy or last minute we sell. We do exactly opposite like them. We are greedy when price is going up. We are fearful when price is going down. When Nvidia comes to 110, we don't want to buy. When crypto Bitcoin comes to 60K, 70K, we don't want to buy it. When it goes to 120, we want to buy it. Right? That is where these right indicators tools will help you. You know what the big companies are doing. Based on that, if we take our decisions, we can be successful like them. Right? Just like based on if your five friends are good, rich, you will be rich. If your five friends are right, not sincere, not disciplined, then you will be one of them. In the same way, if you follow the big companies who make 95% profit, you will be one of them. If you follow some retail traders who don't know what they are doing, you will be one of them. You will be 95% on the losing side. So yeah, that's how if you take time to learn, understand, use the right tools, then there is yeah we can be successful like big companies. So that's it, everyone. So you have all the recordings, right? Every day I do record these sessions with 1,000+ members because 500+ members are using indicators, nearly 500 plus in the options premium channel. Then we have in earnings channel, we have another 400-500 people. In indicators, we have nearly 510 members. Then in stocks, we have some 200-300 members. So earnings also, we are making 85% success using the tool. We have nearly, so I do live sessions every day with 1,000+ members. And then we also have, right, if you go, I share all the recordings also, right? If we don't know what we are doing, I don't do live sessions or I don't share all the record, right? Every recording, every success story, every right what we are doing each day, right? CPA live session. We went into the live session within 10 minutes. We made 4,000 in each prop account. I explained them just within 15-20 minutes. We completed, right? Most of the members completed evaluations, performance accounts. With 10 accounts, $4,000. That is a $40,000 within half an hour. You can watch all the videos, right? How to you have everything, how to set up, how to indicators, how to make money without using your own money, how to do options on futures, right? On futures, they are open 23 hours a day. So even though you are a full-time employee, in the evening time, if ES is at a big sell order block, you do a bear call spread above the sell order block, you sleep. By the time you get up, you will make $500-600 while you are sleeping. So that is the advantage with options on futures. So I am helping or I am yeah, giving you all the information, right? With my 10-15 years of experience in trading, I am telling you how to trade earnings, how to make 85-90% success with earnings. Just by you need to spend 5-10 minutes every day for earnings. You don't need to spend a lot of time. For SPX, yeah, you have to keep watching the levels. For earnings, at the end of the day, you just take the trades. Like that, you have a lot of success stories of so many members, right? Nearly 40-50 members In each session, some right Prasad 12 to 15 payouts, some 5 6 superstars here, Satya here. So there are so many stories, so much of um, information you can use whenever you are free on a weekend. Instead of watching some Netflix series, take time to watch some of these recordings. You can learn and you can earn, right? Because job market, right, before 20 years, 20 years, IT means number one. But with AI, now there is a huge risk for IT professionals. So it's better we have a, if you watch this, you will understand everything, like how to make consistent gains with prop firms. So yeah, right. This trainings itself will cost hundreds of dollars if you have to learn about bull put spreads, pair call spreads, or straddle, strangle, all these things. But I'm doing all this for free because yeah, there is a this is a high time where we all need to create a backup plan. Otherwise, you are taking a huge risk. Your family is at risk. Your mortgage loans are at risk. Better you have plan B. Work on it. Take time. Come out of your comfort zone, and then there is a yeah, then you don't need to worry about anything, right? Lot of these superstars now, they are not worried about jobs or anything. They are so confident that okay, if I lose a job, I can make 2 times 3 times using my SPX strategy, or using earning strategy, or using prop firms. So that is the level of confidence you will get. You can sleep peacefully. You don't need to worry about anything, right? Yeah, that's it, everyone. So if you have any questions, please send me an email. I'll help you with all the details. Or if you any, so today evening 4 p.m. we have a setup session. If anybody subscribes to the indicators, we help them to set up everything, to set up trading view, to set up prop firms, to set up replicanto, all those step by step. We help them with everything. So yeah, you can watch videos whenever you feel confident. You can join. You can keep watching, or you can join us and change your life. It is up to you, right? We are making money, whether you are part of our team or not. We'll keep making money. You can keep watching, or you can be part of us. You can also grow. We all can grow at the same time. Yeah, it is at 4 p.m. CST. Again, there are a lot of homemakers who doesn't know anything about trading or making money. So you, right, all you have already all the information, right? How to set up indicators, or how to use the indicators, how to use the strategies. All you need is just put some time. Instead of watching some movie or some web series, put some time, take it, so that you can become, you take educated or decisions, informed decisions, where you have 90% chance of success. Yeah, once you subscribe to the indicators, you have to fill a Google form, and then yeah, I'll share the Google form. Then you will get the access within next 15 20 minutes. Yeah, that's it, everyone. Talk to you in the evening setup session. And yeah, you can yeah, we are doing uh, great with SPX, earnings, and all the other things. So you can be part of it. Sure, sure, everyone. Yeah, thank you, and talk to you in the evening session. Bye.